The GTA real estate market just sent us a signal. And if you're thinking about buying or selling in 2026, you need to understand what it means. March numbers just dropped for Treb, and this on the surface, they look pretty calm. Sales are up slightly, prices are down, inventory is lower. When you dig into it, one specific metric, and I mentioned this last month, the sales to new listings ratio, there's something happening underneath that tells you exactly where this market is heading. I'm Anthony Malfair, broker and co-team leader at the Property Boys at Royal LePage Signature. Every month, I break down the real numbers so you can make smarter decisions. No spin, no fluff, just the data. So let's get into it. The big picture, GTA stats for March. So we'll start here and work our way in. In March, there was just over 5,000 homes sold across the GTA. That's up 1.7% compared to March 2025. Here's what makes that significant. It's the first year-over-year sales increase we've seen in 6 months. After half a year of declining activity, buyers are starting to come back. At the same time, the average selling price across all home types came in at $1,017,000 and change, down 6.7% from March of last year. We're still just above that $1 million mark, but sellers are getting less than they would have a year ago. And buyers are getting more negotiating room than they've had in years. Active listings sat at 21,596, down 8% from a year ago. And month-end inventory came in at 4.29, which puts us in a balanced to buyers territory. A couple other numbers worth, flagging from the monthly trend chart. Days on market came in at 31 days in March, down from 36 in February. That's a meaningful drop, and it tells you homes that are priced right are moving. We've been saying this for months. If you're priced right and you show well, things do move. An average price ticked up slightly from February's $1,008,000 to $1,017,000. Okay, it's a rounding error, we can call it. Not a dramatic move, right? But it stopped going down month over month, which is worth noting. Now let's talk about the metric that really tells the story. The sales to new listings ratio, which again is that forward indicator. This is a number that I'm watching more closely than, probably any other stat. Average price tells you what already happened. The sales to new listing ratio tells you what's about to happen, or maybe at least better than other stats. So here's how it works again. Trevor reported 14,442 new listings that entered the market in March. That was down 16.7% from March 2025. A significant drop in, sellers putting their homes on the market. You combine that with 5,039 sales, and you get a sales to new listing ratio of roughly 34.9, 35%. And again, here's a scale you need to know. Above 60%, the seller's market, prices rise. 40 to 60%, balanced market, prices hold. Below 40, buyer's market, prices soften. At 34.9, we're in a buyer's territory. Buyers have the upper hand, but here's where it gets kind of interesting. February versus March, what the month over month shift actually means. Okay. Now, you might expect that with sales rising month over month, the sales and the listing ratio would have gone up from February to March, but it actually dipped slightly. In February 2026, we had a 3,868 sales, 10,705 new listings. So it was the sales to new listing ratio was 36.1%. In March, 5,039, 14,042 new listings, a sales to new listings ratio of 34.9. So it slipped about, 1.2 percentage points month over month. And here's why. And why you shouldn't read that as a bad sign necessarily. March is when sellers tend to kind of flood the market, right? Every year, as soon as the weather breaks, for sale signs start to come on the grass. Or the snow in our case. New listings jumped from 10,705 in February to 14,042 in March. That's a 35% surge in supply in a single month. Sales rose too, but supply came in slightly faster, which pushed the ratio down a touch. So this is completely seasonal actually. Happens almost every year. What actually matters here, and this is a real story, is what's happening on a year-over-year basis. New listings in March 2026 are down 16.7% compared to March 2025. So sellers are holding back. They're not putting homes on the market the way they were a year ago. And at the same time, buyers are returning. Sales are up 1.7% year over year. So that combination, fewer listings coming in, more buyers engaging, is the definition of a tightening market. The month over month dip in the sales to new listings ratio is, from what we can see, it seems like a seasonal blip. The year-over-year trend is what's pointing towards some stabilization. Treb said this directly in this month's release. If market conditions continue to tighten as they did in March, selling prices could start leveling off as we move through the remainder of 2026. That's not really optimism, it's just math. Now, let's get into the city of Toronto. Inside Toronto, specifically, there was 1,913 homes sold in March, essentially flat year over year, down 0.3%. The year-to-date average sale price sits at $1,001,000, just over that, down 6.2% from last year. Active listings in Toronto came in at 8,189, down a significant over 10% year over year. And that's the sharpest inventory decline of any market we're covering today. Less supply, relatively stable demand. Toronto is tightening faster than the broader GTA. Now, on the condo side in Toronto, 951 condo sales year to date, up 2.6%. The only market segment where sales were actually up year over year. The average condo sale price sits at just under $650,000, down 9.5% from last year, which means the entry-level buyer has more purchasing power right now than they've had in a long time. Months of inventory in Toronto was 4.28, still a buyer's market, but getting closer to that balanced mark. Let's head a little bit north to York Region. York Region had the strongest sales numbers of any market this month, 887 homes sold in March, 3.3% year over year, up 3.3% year over year. That's the biggest positive swing in the GTA. Year-to-date average sale price was $1,139,000, down 7% from last year. Active listings sat just under 4,200, down 6.4% year over year. And months of inventory was at 4.71, which is the highest of the markets we're covering today, which means there's still room to negotiate in York Region. On the condo side there, 172 sales in March, down 8.5% year over year. The average condo price in York Region was just under $605,000, which is also down 8.6%. They've seen some of the steepest price correction, I would say, in York Region, but that also means the most room for buyers to find values. And then Mississauga. This is probably, I guess you can call it the affordability story. Year-to-date average sales sits at just under $960,000, down just under 8% from last year. That's the most affordable of the three markets we're covering today. And it's sitting below the GTA average for the first time in quite a while. 1,093 sales year to date, down just 3.8%. 452 sales in March specifically, down only 1.1%, which is the most resilient sales volume, I think, of the markets here. Active listings at 1,933, down 5.2%. Is on market averaging 38 days year to date, was up at almost 27% from last year. So homes are taking longer to sell, which again gives buyers time and leverage. Condos in Mississauga, the average sale price was $527,000, down 9.6%. The most significant condo drop of any of the markets this month. If you're a first-time buyer and Mississauga is your area, condo prices there right now are as competitive as they've been in years. So really, really good opportunity there if you're a first-time buyer, especially. Months of inventory, 4.28, which is the same as Toronto, balanced to buyer's market. So what this means for you, let's bring this all together. If you're a buyer, you still have the upper hand. The sales to new listing ratio at just under 35% confirms you're in a buyer's market territory. Prices are down year over year across the board, 6.7% at the GTA level, and even more in specific segments like condos. These on markets are dropped from 36 to 31, which tells you the right homes are moving, but you still have time and negotiating them. This is not a market where you need to panic. So you don't need to rush, but you need to be in the market so you can take advantage when you see those opportunities. It's a market that is starting to tighten though, I think. And if the listing supply continues to shrink while the buyers are returning, that window narrows. If you're a seller, pricing strategy is everything right now. Homes are selling, like we said, 5,039 sales in a single month is really active. But buyers are informed and they have leverage. If you price to the current market, you sell. If you price to where the market was a year ago, you sit. The 31-day average days on market tells you that correctly priced homes are finding buyers within a month. That's actually a functional market. You just have to kind of meet it where it is. So the one number to watch going forward, again, the sales to listings ratio, if it climbs above 40% in April or May, which is possible given how quickly listings are falling year over year, we'll be looking at a balanced market. And that's when price declines stop. So watch that number. That's the March 2026 market breakdown. If you found this useful, hit subscribe. I do this every single month, so you always have the clearest picture of what's happening in the GTA. And if you're thinking about buying or selling this spring and want to talk through what this data means for your specific situation, because again, micro markets always work differently than these macro markets, the GTA, Toronto as a whole. If that's your situation, reach out. That's exactly what my team and I are here for. Links are in the description. Again, I'm Team Welfare. I'll see you in the next one.